In the beginning, finding trend lines can seem very easy. All you need to do is that you need to connect 2 points on the chart and you draw out the line like this. Once again, right here, we connect two lows and we draw out a trend line. But the truth is that in real markets, it's not this easy. If this right here was all you needed to do, then everyone would be a trader. So in this ultimate trendline trading guide, I will show you guys how to actually draw trend lines, and even more importantly, what are the signs and what are the rules you need to think about when you use trend lines. This can help you make money. But alright, so before we can start drawing our trend lines, we first need to understand what is a trend in trading. And in very simple terms, a trend is the overall direction of price over time. So when we have an uptrend, what we're looking out for is that we need to see both higher highs and higher lows. So this looks something like this. The price pushes up. This is what we call an impulsive move. Then it pulls back and creates a low. And in order to have an uptrend, we need to not only have higher highs, but we also need to have higher lows. And the opposite is true for the downtrend. We need to have lower highs and lower lows. So a downtrend, lower highs plus lower lows. We also have something called a sideways trend. Another word for this is a trading range, a sideways market. And this is when the market has no clear direction and is going sideways. And another very important thing to notice right away is that trends exist on multiple time frames. In fancy words, we say that trends are fractal, meaning that within every impulse move, we also have small trends. And within the pullbacks and impulse move, on the next time frame, we have small trends within that as well. So you will find trends on the daily time frame, 1 hour time frame, 15-minute time frame, and so on and so on. But right, so now then, what is a trend line? Well, a trend line is just a straight line connecting significant highs and lows. So an uptrend line connects higher lows and it acts as a form of dynamic support. Dynamic support means that the support is not just horizontal, but it actually moves over time. So this is what we mean by dynamic. And a downtrend line connects lower highs. So if we have an uptrend that looks something like this, the trend line is simply the line that connects the lows right here. And one thing I can already mention right away is that in real markets, this is very important. You will very seldom find these perfect trend lines that exactly connects the lows. Many times, one low might dip a bit below the trend line. One low might, end a little bit above. So what I like to think about is that I like to think about trend lines, not really as lines, but more of as like trend zones. And here, and this is very important, when we break a trend line, this can often signal a shift in the market direction. And by the way, I can also just mention that if you want to learn more about support and resistance, this is a very deep topic, and I do actually have a full course on that topic. I will make sure to link it in the video card. So make sure to check out that course after this video. You can, for now, save it in a watch later playlist. But now then, how do we draw and confirm trend lines correctly? Step number 1 here is that we need at least 2 points to draw a trend line. We need to connect either 2 highs or 2 lows, but many traders look out for a third touch to confirm the trend line. So many traders see the third touch as a sort of confirmation of the trend line. And here, and this is something that many traders say, that the more touches we have on a trend line, the more significant it becomes. And this is, at least from my experience and opinion, not really true. In my opinion, it's much more important the quality of those touches. Or in other words, it's more important how the price action is at the touches. Because when you just draw random trend lines, you will find many sort of false trend lines that might even have 4 touches or even more, but they can still be weak trend lines. So this is important. And an example of this is that when we see higher highs into a resistance, this can actually show weakness and not strength. So let's say we have a sort of little upward sloping resistance line right here, and the price moves something like this. Or actually, I'm sorry, it's a mistake here. I meant higher lows, because when we see something like this, you have a resistance that creates higher highs, but you can see here that the low here is getting closer and closer to the resistance. This is actually a sign of a potential breakout. So even though we're seeing more and more touches, it can mean that the trend line is weakening. So I hope you already can notice that it's not as simple as just drawing lines on the chart. You know, if you have seen videos saying that all that matters is how many touches, I strongly disagree. So another point here is that it's a good sign if the touches of the trend lines are well spaced. This is not something that has to be true, but what I mean by well spaced is that we have like a beautiful trend where the distance, the distance between the highs and lows here are at the around same length. Because once again, one sign of weakness is that if we start seeing, you know, some very sort of short-term touches right here, it can be a sign, it can be a sign of weakness. But right, so now let's take a look at what actually makes a trend line strong. The first point here is that we want touches with strong reactions. So this shows that we actually have some real demand or supply at the level. So if we have an upward sloping trend line right here, we want the touches of this trend line to preferably be strong. And another sign you can look out for is that on these touches, it's a good sign if we see volume coming in. Volume is a very important indicator that you can combine with most concepts. And I do have a full course on volume analysis. I'll make sure to link that course up in the video card as well. Another point is that we want to see well-spaced swings. This is what I talked about just recently, that we want the sort of, preferably the space between the touches to be, you know, sort of geometrical, or the distance should be around the same. Another thing is that we preferably want a moderate slope. So we don't want the trend to be too steep. Because when we see, you know, these sort of parabolic trends that are super steep right here, it can many times, you know, be first of all hard to trade, and it's more often that these trend lines that we connect in these trends can be, you know, not as significant. Another point here is longevity and visibility. So across time frames, if we, for example, see a trend line on the daily time frame or a longer term time frame, this can be more significant because more traders are paying attention to that trend line, right? But you can, of course, use trend lines, you know, on the shorter term timeframes as well. And here, and this is super key, you always want to judge the trend lines with the context of both price action and market structure. And you don't want to rely only on your trend lines. Once again, I do have a full course on price action. Highly recommend to check that one out. I know that I have been, you know, sending you guys to lots of courses, but this just proves the point that trend lines are not simple, and to use them effectively, you need to learn about some deeper concepts like, you know, price action. It's good if you learn about volume as well. But right, so now when you know some signs of a strong trend line, now let's actually take a look at the opposite. So what are some signs of weak trend lines and some signs that they are likely to break? This is actually very important to learn for two reasons. First of all, if you are trading in the same direction as the trend line, it's important to know when that trend line weakens so you can exit the trade. But it can also be super useful to learn this, because if you want to trade breakouts, or in other words, you know, trade when a trend line is failing, this is also, of course, super important to learn. So the first one is the opposite of what we talked about earlier. If we have overly steep lines, this means that the trend is usually short-lived, so you can look out for opportunities right there. Another thing you can pay attention to is unconfirmed or sort of forced lines. With unconfirmed, I mean that it hasn't had 3 touches yet. This is a thing that many traders use. But remember what I said earlier, that I focus more on the quality of the touches rather than the quantity. And forced lines right here, what I mean by this is that many traders try to, put trend lines everywhere on the chart, and this would just make the chart sort of harder to read. Technical analysis is all about making the chart more clear. You know, the only reason we even draw trend lines in the first place is to better understand the chart. So if you are very good at price action and market structure, you might even need to draw the trend lines. Another warning sign here is if the price starts to hug the line or clustering around the line, this is a sign that the trend might fail. So if we have an uptrend here, we have an upward sloping line. Let's say we have, first of all, we have a good touch, but the next time the price comes down to the trend line, it might start hugging the trend line like this. This is actually a sign of weakness. And as we can see, if we look closely right here, this whole part together becomes a bearish flag. Another one, this one is very obvious. If we fail to make new highs or lows, the trend is definitely weakening, and this will be visible on the trend line as well. Next point is multiple shallow retest without a strong bounce. This is all about the quality of the touches once again. If we are not seeing these strong bounces, it's a bad sign. And last but not least, if we see breaks with strong volume or momentum, this is often a signal of a true reversal. But right, so now let's actually jump into TradingView, and we are currently looking on the 30-minute time frame. We're looking at Bitcoin right here. And first of all, I can just mention that if you don't have TradingView yet, I do have a special link to TradingView. You can use that link and you can try TradingView Premium for free for 30 days. And after the trial, if you decide that you liked it enough, you can get a $15 bonus toward your new plan. So use that link if you don't have TradingView yet. It only works for new users. So this is if you, have a new account or haven't used TradingView. But right, so now let's start thinking about, what do we need to consider when we draw our trend lines? Well, remember what I said earlier, that these sort of strong reactions or strong touches is at least what I'm looking out for. So in this case, you can see that we do have two very strong touches. So we can connect these 2 points, right? These are two, significant touches of this downtrend right here. What you can also notice, I do have a volume indicator on the chart. You can see right here, we had tons of volume indicating that this is a real move. You can also see that this move right here towards the downside, we have had lots of volume. So these are good signs. And what we can then do is that we can extend the trend line. But in this case, you can see that we did get yet another touch, or almost like 2 touches right here. But you can see that here we have actually 2 signs indicating that this trend line might be weakening. First of all, you can see that while we had some volume, we're not seeing as significant reactions right here. And you can also see that here we are starting to see higher lows into the support. You can see we have a low right here, we have a low right here. So this is actually 2 signs that the trend line might break. And another thing I can mention right here is what I usually do is that I try to adjust the trend line to include as many touches as possible. This is not a perfect, this is definitely not a science. This is not a perfect way to do it, but I do want to include sort of these touches, this touch right here, this touch. And then you can see eventually this trend line broke out right here. We got, first of all, a candle with, I think this was the candle with pretty significant volume. So that is a good sign. You can see the volume bar is higher than the previous bars. And then we also got some solid follow through. We got multiple candle closes above the trend line. So this is an indication that this sort of short-term trend might be coming to an end. Another thing I can mention, this is just a quick tip or trick, is that you can click Control C and then Control V to copy the trend line. And by doing this, you can just draw down the trend line, and now we will have a trend channel instead. But now to draw our next trend line, we connect 2 lows. We can connect the 2 most recent low right here. You can see the first one was a pretty significant move towards the upside, also quite a bit of volume, so that is a good sign. The next touch was not as significant, but it's still another touch, and now we have 2 points, so we can start drawing out our trend line. If we extend this trend line, it looks something like this. You can see right here the price came down, but this is very important. You can see that it actually stopped a little bit below the trend line, and this was what I talked about earlier, that we should look at the trend lines more of as areas than perfect lines. The price pushed up, we came down, tested this trend line once again, we saw a new impulsive move, we came down, tested this trend line once again. But here you can see, first of all, the price started to hug the line a little bit here. We didn't have lots of volume, and you can see that the next push up was very weak. Now we are starting to see some warning signs. We have a high, we have a lower high, and it was after this point that the trend line eventually broke towards the downside, and we saw a very strong move down. Now, last but not least, how can we trade these trend lines? Well, we can both trade, the touches. We can trade pullbacks. So you can look out for chart patterns. Like one chart pattern I really like is the bull flag and bear flag. If you want to learn more about chart patterns, I do have a full course about chart patterns. I'll make sure to link it up in the corner in the eye. But you can also trade the actual breakouts. For example, right here, you can see that we got a strong and clear break of the trend line. So just as a quick, example, let's say we entered a short position of this break, we can set our stop loss above the high, and using a risk to reward ratio, the trade would have looked something like this, and you would have locked in some nice profit. But all right, guys, so in order to, really use trend lines and to even be able to identify trends correctly, I highly recommend to start learning about market structure. So if you haven't watched this course, I strongly recommend to check this one out next.